The risk of loss in trading futures and options can be substantial. Therefore, only genuine risk funds should be used in such trading. Futures and options may not be a suitable investment for all individuals, and individuals should carefully consider their financial condition in deciding whether to trade. Option traders should be aware that the exercise of a long option will result in a futures position. Information herein has been obtained and prepared from sources believed to be reliable. Comments contained in these materials are not intended to be solicitation to buy or sell any of the commodities mentioned. Past performance is not indicative of any future performance. Opinions expressed here are the opinions of the author only, and not the opinion of any firm the author may be affiliated or associated with.
All right, welcome back to Commodity Classics. Thank you for joining us. This is my segment that I've carved out for myself. Ladies and gentlemen, in this segment, I'm going to go through the different processes of this Forex PhD FX fund, which I've got a lot of questions. A lot of people have been very pleased that I brought this out to the viewing audience on a global scale. We're going to cover something different every day. It's not going to be the same stuff over and over. As we go forward, what is Forex? How does it work? Why does it work? What is a carry trade? How does it work? What are the fundamentals and the technicals that affect this market? And so on and so on and so on. Yesterday, if you're watching our show, I told you that I would have interest deposited into the account. So far, it was about a half day's worth of interest because I built this thing overnight, and you get a full 24 hours worth of interest that gets deposited into this account every day. Yesterday we walked through all of the different currency pairs, what their relative interest rates are on those pairs, meaning interest that goes into your account. And today I'm going to show you what's happened from yesterday to today. Tomorrow, when we have a new balance in the account, you'll get a full day's interest, but you're going to get pretty much the idea. Don, let's see if we can go into the account right now. Now, ladies and gentlemen, I have this on magnifier so that I can bring this out a little bit more. We started this account with $5 million. We've got $1,631.90 in interest deposit. That's about half a day's interest, roughly. The unrealized P&L, we're up about $114,000 since we opened this account and started trading it yesterday. And I think yesterday we had $50,000. The net asset value, $5,116,000. And as you can see, realized P&L, there's been no trades. This $1,000 is pure interest. Gets in, we use $531,000 out of the $5 million to get that interest, and our leverage is roughly 3 to 1, 15,000, a little under 15,000, controlled by 15 million. I'm sorry, controlled by 5 million. Now, let's come back to me for a second, Don, and then I'll walk them through some of the positions. Here's the numbers. If you have a pencil and paper or calculator out, I'll walk you through what this means. We had $1,631.90 go into the account in about a half day's worth of interest on a $5 million account. Well, you say that's not a lot of money. Multiply that number times 365 days. You're going to come up with $595,000 and $595,643 and change in a year in interest on $5 million. That's just the half a day's interest. So that's going to be about 11.91% on a half a day's interest. Tomorrow you'll see the full interest deposit, and I'll show you the individual interest deposits. Well, that's nice. That's on the $5 million, but how much money are we earning on the working capital? Remember, I was telling you, I think it was about 500. Let's go back into the account for a second. The working capital, margin used, $531,000 we've used. Well, the interest that comes into the account on a half a day is $595,000. So we're looking at about 112% interest on the working capital. We've decided to just go with the overall account balance because everything is working for you. But the money is actually in the market. You get about 112% on a half a day's interest. Tomorrow you get to all of it. Let's go back into the account, because one of these things that I wanted to show you, ladies and gentlemen, is we're still in 15 positions. And whereas our exposure, we're still in 12 different countries. And now the activity. So let's see here. On May 28th, This is the balance at the end of that. We got $6.81 cents deposited from the U.S. ZAR in interest. U.S. Turkey, let's go back over there, $249. Mexico, $83, $38. The list goes on and on. But what we need to do now is to start taking a peek. Let's come back to me for a second, Don. And I'm going to open this up and see if there's any questions in the shout box. How do you manage this thing? Let's come back to me, Don. Thanks. How do you manage it? Do you just throw it all in there at once and let it ride? Or do you use risk management techniques, trailing stops, leverage, so that these fluctuations that do occur in the account can be protected if you have profits or if you have losers? So what I'm going to do is I'm going to put this positions trade on, and as you saw, we're up about 115,000 in about a day and a half or so. We've got $28,000 in profit sitting on the Euro Turkey. How do we manage that? Well, here's what we're going to do. I'm going to change this to the Euro Turkey, and this is what I think is going to be kind of fun. Let me go up here, Euro Turkey, and I'm going to bring this in a little bit closer so that you can start to see where the charts are. And let's do this. Let's use some technical analysis. I'll put a trend line on there. I'm going to go up here to right about the high right there, draw a trend line down to, let's see here, maybe we'll go down here to the first time that it stopped going down and lock it right there. Okay, and now what we're going to do is we're going to, let me get off of that, go back in here. I'm going to put a Fibonacci retracement in there. Let me expand this a little bit so you can see a little bit better. Okay, we're short here. Market's dropped here. Let's do this. We have on the position, the Euro Turkey, we've got 989,000, let's see, average price units. There we go, 638,020. Let's put a trailing stop right up here at this point. And we're going to actually have to come over here, and we're going to put a buy limit of 638,020. I'm going to change it so it's going to stay there for a month and submit it. Okay, and there we go. I've got a trailing stop. I only mean that as an example of what we're doing. I'm going to change this to another chart. So let's come back to me for a second, Don, and I'm going to show everybody. What I'm going to do is I'm going to put in some trailing stops on this market. You don't have to sit and watch me do every one of these. We're going to start locking in some of these profits. So as we draw interest on the trade and it moves in our direction, and ladies and gentlemen, I feel that right now is a very good time to put these trades on, because there's going to be, yes, as you heard earlier, possibly a liquidity crunch, but there are probably a lot of very wealthy bankers that are wise to this, probably going to use this vehicle as a way to draw larger sums of interest into their account. So as we go into this, there's going to be better profits as we move forward, because these exchange rates will probably move in our favor. I've done a lot of work on that so that you can be able to call me and pick my brain if you like to do this. But I wanted to give you an idea of two forms of risk management with this. One, we've got an extremely large interest revenue generating model. In other words, instead of the 3.85 or 4% you can get at any bank for a money market or, say, a shorter term CD, you can get roughly anywhere from 20 to 40% interest per year. The average is somewhere just under 30% interest a year in this kind of fund. So Tony Chernowski was on the show earlier today. Is expecting a huge move down in the stock market. He was also expecting a huge move down in the gold market. Most people pull their money out of stocks and go into gold, or they go into bonds. Well, if bonds aren't yielding very much, if T-bills and CDs And keep in mind something, ladies and gentlemen, if you go into UST bonds, you're still affected by a devaluating dollar. I'm not saying the dollar is going to continue to devaluate at 18 to 20% a year, but I'm not saying it can't either. This is a vehicle that you might be able to use. So what I'm going to do now is I'm going to start posting the results. I'm going to show you this little screen right here. I'm going to start taking these results that we've got right in here. Let's go back to that. I'm going to start showing you where the account is and what the income is per day on our website. And I will start making some, using my technical analysis. Tomorrow, we're going to show you what the new interest is that came into the account. And please, come into the chat room. Ask us questions about how does this work. When would it be good to use this type of a fund? And, you know, I mean, we had a lot of people asking me, how much does it take to get into the fund? Pick up the phone. Give me a call. If you've got questions, I bring this out for your benefit so that you can use this vehicle as a place to go to cash when the time's right. Thanks for joining us. I'll be back tomorrow on Commodity Classics. We'll wrap up the week and bring you even a special message at the end of the show tomorrow, too. Thanks for joining us. I'm Michael Yorba, your host here on Commodity Classics on Yorba.tv.